So this is a little bit more high level of what we've got going on. I think we've all seen that, we had a good election cycle for cannabis. They're talking about putting a full vote to take cannabis off Schedule 1 this year. We've already been through that with CBD and hemp. I get that question all the time. What's going to happen when they take it off Schedule 1? It's a disaster for us as accountants. Nothing could be farther from the truth. And we already got to watch that happen with CBD and hemp. If you remember, CBD and hemp were exactly like cannabis and THC, fully illegal just a couple of years ago. They came off Schedule 1. Now they're federally legal around the U.S. They need us every bit as much as cannabis does, and even more because the tax side is more complex. And so when we look at these different verticals, maybe let's just talk about that right now. In both niches, you've got farming, you've got or cultivation, you've got chemical processing, taking that plant, growing a plant, turning it into flour, then turning the flour into oil. How do you do accounting for both? Then you take that oil and it goes into, and by the way, raw what could be a finished good, like flour, is a finished goods. People will smoke a joint, but other people take flour and turn it into oil and into products. So a flour can be a finished good. It can also be a raw material. Same with oil. They take the flour material, and then we're going to translate it into a finished good of oil. That oil could be a finished good sold to another party, or they could it could be a raw material in something else, like lotions or foods or beverages or whatever. So we have manufacturing, then we have distribution companies, we have labs. Those are both kind of on the border, ancillary companies, still touching the pot, but still generally considered ancillary companies. And then we get into retail dispensaries, and we have both retailers for cannabis and CBD, and sometimes both. And then even beyond that, we now have delivery companies. So just at a high level, 280E applies to cannabis. Means if you traffic, that's a key word, traffic, a Schedule 1 drug, you can't deduct anything or have any credit on your tax return. So it definitely applies to cannabis, doesn't apply to CBD, but there are some gray areas such as delivery companies that are they trafficking? If they drive pot from a dispensary to a consumer, is that trafficking? Well, that has not been tested in the courts yet. There is some language in the Champ case that would make me think, okay, you could probably push that that's not trafficking, but buyer beware. We don't know what the courts are going to say yet on that front. So we have all these different verticals. We have different accounting for each. People also ask, like, well, how on earth are we going to do the accounting for these different verticals? And it's different, and the rules are different in every state. And I think a lot of times accountants and bookkeepers, yes, there's massive state rules in every single state, but that said, generally state rules are covering things like, badges and how tall your fence is, security cameras, all kinds of non-accounting things. And usually there's a blurb in there, you got to be keeping good books and records, and they better be done right, etc. And usually not much higher level defined. So in our program, for all the verticals, and whether it's cannabis or non-cannabis, we're going to be trying to do GAAP cost accounting compliant books, because we think that adds value first and foremost for running the company, for the board, manager, owners, just to run the company. It also access to capital, either debt or equity. It will add value at M&A, of which we're going to see an absolute ton of M&A as we move towards legalization, as well as exits and IPOs. So all those reasons are good reasons to have good GAAP accounting. Applies to all 50 states. And oh, by the way, if you do good GAAP accrual cost accounting, you're set up perfectly for Tax Code 471 to maximize the amount of costs that can be put into inventory, which flows to cost of goods sold, meaning lower taxable income for your owner groups. And so, hi there, Stephen. Just make sure I don't have any questions and make sure I want to hit all this. So we have all these issues of different verticals. We have cost accounting. We've also got consolidations as well. And not only consolidations, combinations. It's completely normal for you to get a client, say in Boston, that's a dispensary, and you show up and you think, oh, is there an LLC or C Corp? And they tell you, oh, we have 9 entities. even though it looks like a dispensary when you walk up to the building, and that's really what the main business is. They may have a real estate company and an IP company and a equipment company, and some non-cannabis, some cannabis. Some of the companies may be parent and sub, so consolidations. Others could be sister related party companies where we're going to do combinations. So we got to have systems and tools to be able to do that correctly as well. So all the things we're doing for these clients is adding a ton of value to them, because frankly most people serving the niche at this point just don't have the tools or knowledge or systems to serve it correctly. And these people just, they need this. They need to run their business, to comply with tax, etc. It's not super simple. It's darn right almost impossible if you don't have the right tools, charts of accounts, work papers, etc. And that's why, as I was working in the niche over 5 years, created these tools, and I'm still doing it today. We're now at over 100 work papers, systems, and tools in our program. I think I added 20 new ones last year. We're just a month into this year, and I've added some more as well. So those are kind of at the high level, all the different issues of how we're going to sell it, serve the niches. And so we're going to do gap accrual cost accounting with the right tools and knowledge. Then when we get to the tax return time, we're going to use 471 for cannabis and CBD. Then if we're in CBD and hemp, we're going to need to go even further. We're going to need to look at things like 199A and QBI and 263A and other costs that we can hopefully get into inventory, other deductions on the return. So those will be even more complex. Meanwhile, we're going to be aware of state rules, many of which are non-accounting. We're going to be making sure our clients complying with those, as well as FDA, USDA, etc. On the medical side, both cannabis and CBD are being treated as medicine, meaning the FDA is going to be heavily regulating this space and cracking down on many. They already are cracking down on CBD companies right now because many of them are violating FDA rules. So we've got just lots and lots of issues as we go forward into the new year. I'll make sure I'm covering all this. So again, 280E, the general rule, can't deduct anything if you're on Schedule 1. However, you are allowed to book cost into inventory, which is return of capital. Inventory is not a deduction or a credit. It's simply a return of capital. And so the more dollars we can get in inventory for our clients by doing correct cost, that inventory, when it's sold, becomes cost of goods sold. Now, I get this question, and I see these posts all the time, and this is accounting 101, and it's also common sense. What does the word cost of goods sold say to you? Cost of goods that are sold. So I get all the time costs. We're going to have cost of goods sold even though we had no revenues last year. It was a startup. We had no revenues, but we're going to have cost of goods sold. Well, how on earth can you have cost of goods sold if you don't have sales? It's impossible. It defies common sense. It defies accounting 101, so don't do it. So what you can do with cost in 2020, if you were a startup, you can appropriately do cost accounting, and you can move some of those into inventory, work in process, and finished goods. And then in 2021, when those goods are sold, then you'll have. So again, don't put cost of goods sold if you haven't sold anything. That is going to be our basis. The end of this month, I'm doing a webinar on what the heck cost accounting is. Most accountants hate it or vaguely remember it from college. What is it? Why is it needed so massively in all these niches? Cost accounting is an absolute necessity in cultivation, processing, and manufacturing of products. You can't really do it without it. QuickBooks is not going to do it for you, and really other software isn't either. So we're going to have tools and systems for doing this cost accounting. It's required just to run the company, for financials and GAAP compliance, as well as lenders and investors. And most importantly, if we're doing cost accounting, we can maximize the inventory allowance in 47111, meaning lower taxable income for the owners, which means lower tax paid. And we're doing it correctly. We want to make sure we're doing that right. And so that webinar, let me make sure I don't have any more questions. We're also, Ashley, go ahead if you're on, post in. We're going to put in our cannabis accounting guide as well into this. So you go ahead and put that. And actually, if you have information, I think we're going to do February 24th on this cost accounting webinar. That I'm gonna look at many things. Including things like how much does it cost to plant a seed in a teeny little pot and grow a pound of weed over 6 or 5 months. Um, some farmers have told me it's free. They had a pot out back and they had a little bit. They got dirt out of the ground, and they planted a clone. They just clipped with their scissors off another plant, and so it's the pot. That's not really true. That's what we use cost accounting to determine that. Same deal on oil. How do you determine the cost of a gram of oil for THC or CBD? What's a bill of materials? Why is that important when we're looking at oil manufacturers and product manufacturers? Um, for example, what are the components of cost of an edible gummy bear? And how do you figure that out with the cost accounting as well? How does cost accounting apply to services? So instead of cost of goods sold, we have cost of service. Still need to do cost accounting in things like labs, distribution, delivery companies. And so as well, we need to do that cost accounting. So we're gonna look at that in that program. I did see a question here. Working capital loan interest is not cost of goods sold. So interest is interest expense that generally in any set of books you'll have non-operating expenses, things like depreciation and interest. That's why investors often will look at EBITDA, which is earnings before interest, taxes, depreciation. Those are other costs that are not operations, definitely not cost of goods sold. um, Even though, yeah, even though you raise capital to buy inventory, still not going to fall into that place. So we'll go into that in more detail in the next one. Let me see if Ashley is. There's our accounting guide in there as well. Let me make sure I didn't miss any of our topics. Sometimes I get there. And now, one thing about software issues and lack of vendors in the industry, I want to talk about that briefly. First of all, I think it is highly likely that we are going to see cannabis legalized in 2021. We just saw the MORE Act pass in the House. We're now seeing Chuck Schumer is on board on the Senate side, and they are talking about in the first 6 months of the year having a full congressional package to take this off Schedule 1, which is going to bring in a flood of capital. It's going to solve many of the banking issues and merchant services because those people are going to jump in as well. So it's going to be the gold rush. So if you're even considering getting into cannabis as an accountant or bookkeeper, right now is the time to do it. 8 months from now, yeah, you can still do it, but everyone and their uncle is going to be jumping in, whether it's accounting or capital or software or services. And so right now is a great time to be doing that. And again, we talked about this. What are looking at the profits margins, etc. So, and that's what I've explained to farmers or manufacturers. If you're running a business, you have to understand your gross profit and also your net profit, and you have to do costs. Understand that so you can manage your business and how that relates with fixed costs and variable costs and how that changes over scale. So obviously, example, rent, you pay $1,000 rent for your barn and you grow one plant in that barn, the costs are going to be enormous for that one plant. But if you put 1,000 plants in there, you can spread however much rent that we're going to allocate into the WIP and inventory. We're going to be able to spread it over more plants, driving the cost for each one of those plants down. So lots to talk about. Thank you everybody for joining. We'll have this recorded as well, and you can use this, hopefully use this guide. If you're interested in the niche and want to check out our website, dopecfo.com, you can also go to dopecfo.com and look at our program tab. You can email us there as well, and we will let you know about our program, which is a 4-part program around education and training, a full marketing system for how we exactly find land, price and make offers to clients. And then what I call our firm in a box, which is every tool, work paper, and system to actually serve this niche correctly and with world-class service. And then finally our community layered over the top, which our current community of 300 of us, that we are second to none in the U.S. at this point. All right. Thank you, everybody, for joining us today, and we'll be back again next Thursday.